Well, cool, guys. Let's get this podcast kicked off. I'm here with Kyle Estep. I just made sure I pronounced that correctly. And you are the VP of Growth for Take Command Health, right?
That's correct.
Boom, nailed the intro. Well, Kyle, I appreciate you coming, man. Been good to get to know you. I think we met in Vegas at ITC.
InsurTech Connect.
Yeah, InsurTech Connect. We were in the same booth with our friends at IDEON, which was a lot of fun. And, you and I started developing just a conversation from there. Talked a little plan side, talked a little Take Command, and you've really been the person that has educated me so far on this idea of an ICRA.
Yeah.
So today we're going to talk about ICRAs, and I'll come up with a really cool title for the podcast. But ICRAs, and even I think a little bit of the QSERA solution as well.
Yeah, because why have a 3-letter acronym when you can have a 5 or a 6-letter acronym?
ICHRA.
There you go.
Okay, ICRA 5. Yeah, let's get it as complicated as possible. And I'm going to put you on the spot. You'll have to actually tell me what that acronym means here in a minute.
Oh yeah, and we'll make it simple. That's the goal.
Okay, cool. But before we do all that, again, obviously the bulk of the conversation is about the subject of ICRAs, kind of a new solution in the marketplace, a way for employers to maybe get out of the risk business altogether and employee benefits and offer a nice way for employees to still be able to cover the cost of their premiums to a degree. So that's what we'll talk about for the majority of the show. But before we do that, Kyle, who are you? What do you do? What's your background? What's cool about you? All that stuff. The floor is yours.
Yeah. Okay. Well, I guess I'll start by saying I live probably down the road from you. So I'm here in DFW where Take Command is headquartered. Moved here about 7 years ago to help launch Oscar Health, which was kind of one of the early InsurTech carriers.
Okay.
And so the company was based in New York at the time. I came here to launch it in Texas.
Okay.
Before kind of getting in that entrepreneurial world, my background was really in consulting, where I was at Deloitte out of college, and then did an MBA, and then went back and just kind of fell into health insurance.
Well, was it something that you covered while you were consulting for Deloitte?
Exactly. Okay. So I finished up my MBA in 2012. And if you'll remember, the ACA passed in 2010. Mm-hmm. So between 2010 and 2014, a lot of the insurance companies were kind of freaking out about all the change the ACA was bringing. And if you're a consultant, that kind of chaos creates opportunity.
Yeah, absolutely. So what were you at that time? What were you kind of working with these companies to solve for?
Yeah, I would say mostly the big changes that were coming to the individual and small group markets.
Okay.
So in particular, right, we were completely rewriting the rules when it came to underwriting and pricing and product and plan design, as well as that caused a kind of a fresh look at go-to-market strategies for the big carriers.
Okay.
So I was doing work, whether it was products and benefits, go-to-market strategy and sales strategies, or even frankly, kind of launching new business units within the larger health plans to focus on the opportunities that were now becoming available in the individual market.
Well, and was it something you had personal interest in over time, or was it the fact that just because there was so much chaos and so much opportunity to talk about it that you kind of fell into it? Like, was there real interest voluntarily from your side, or no?
I wish I could say I had some amazing story around why I fell into and love health insurance, but really it was just kind of dumb luck. Mm-hmm. I think what hooked me after a while was I had really good mentors, and like anything, when you have people that you enjoy being around and working with and learning from, that gets you hooked into the work. So within a big company like Deloitte Consulting, you have kind of tribes, and the tribes do different types of work. And so I kind of became part of the health insurance tribe, mostly because of the amazing mentors I got to work with.
Okay.
The second piece would probably be that while health insurance is probably about as unsexy as it gets on the surface, if you really approach it from an intellectual level, it gets really interesting when you try to understand the complexity and the stakeholders and understanding why things are the way they are and how do you get to a better place. Because that's the one thing as an industry we can all agree on is the status quo is not good enough.
Yeah. Yep.
And that's where then I think, I learned more and more, and the deeper I got, the more I dug.
Well, I would say intellectually stimulating, I would agree with you wholeheartedly. I would say I might have disagreed with you early on in my career because I was only working on kind of a small facet of the insurance world. The more I expanded upward, especially into the world of self-funding and cool things like that, I realized it's a lot of finance. And it's a lot of creativity around the way that you set up plans. I mean, the potential is nearly infinite in the self-funded world to come up with ideas and a strategy to put them in motion and to solve problems. And so I think intellectually stimulating is a great way to put it. I don't know, was the ACA, world the same for you? Maybe because it was still burgeoning at the time, that it was still that way for you to think about things?
Yeah, and I think if we kind of compare and contrast our backgrounds, I think you growing up more on the market side of putting together solutions, and the more you understood kind of what I'm hearing from you is kind of putting together the Rubik's Cube
Yes.
and understanding how do I bring the right solution to a client. For me, it was more being in the bowels of these big insurance companies
Okay.
where you might have people that work for that insurance company, but they've been in the sales department for 20 years or in claims processing for 10 years.
Yep.
What I was uniquely lucky to experience was the interconnectedness of all that. And that was where the consulting experience got to be fun, because I actually understood, well, yeah, the salespeople said, why can't you just give me a product like this? But then the actuaries and the claims say, well, because it needs to be like that. Or the compliance people, God forbid, weigh in and say, well, actually it needs to be like this. You're all wrong, right? And really trying to understand all that and bringing those pieces of the puzzle together.
Well, that's what I say. I look at kind of the role you played in Deloitte with a little bit of envy, because you do literally get to look at from the outside at a business and really take in the whole landscape of it. And then, as you said, like you will lean in eventually to solve a solution or a problem within that framework, but you kind of get to come in from the outside and have a new, fresh set of eyes to look at this problem and work with a company to solve these problems. Like, I got to ask you though about life at Deloitte. I've heard a little bit about kind of the travel schedule and the hours that you keep, you know, almost like a lawyer would keep the number of hours, because it's just a stressful job, but it's also a highly rewarding profession at the same time. So was that experience similar for you during your time there?
Good question. I would say when I was in consulting, it was the typical what we call 3-4-5 model, where you typically fly out Monday morning, you're gone for 3 nights, Monday, Tuesday, Wednesday, on site with your client for 4 days, usually flying home Thursday. And then the 5th day, you're either working from the local kind of office of the consulting firm or working from home.
Okay.
Now, that was the historical model. The one thing I've heard from all my friends that are still in consulting is that the pandemic has changed the game when it comes to business travel. And so now there's a lot more flexibility there. I'm excited to see it. My friends that are still in the industry and now have kids and families and, you know, sports games to go to on a Tuesday evening for a kid, you know, I think they're enjoying much greater flexibility than what the industry saw 10, 15,
Well, I'm happy to
years
hear it,
ago.
because that is one of the things I did hear is like that travel schedule was required. And so it did pull people, especially with young families, away from a lot of the events that they would like to be. But that was the nature of the beast, right? Obviously you have a high income that's associated with that and the efforts that you put in, but it was kind of the nature of that profession. So I'm happy to hear at least it's evolved a little bit, where the work-life balance is probably a little bit better.
Yeah, and it's funny, you know, I look at the two of us, right? We both got little kids and families, and for us, the idea of just grinding on the road would be terrible.
Yes.
But it's funny when you're 22, the idea of, oh, I get to go put on my fancy suit and get on an airplane every Monday morning and act like I'm important. It's funny. So we use it as a recruiting tool for the undergrads, but then for the older folks, you want to highlight the flexibility.
Absolutely, I agree, man. And then still, even I travel maybe once a month, twice a month, and I still kind of look forward to it. Some of it is now with little kids, I look forward to maybe a full night's sleep without without crying kids or somebody interrupting the sleep. But also, I think it still is fun to just get on a plane, have an event, go see people there. There's a level of effort that coincides with getting on an airplane that's higher than just being on a Zoom. That suggests there's a higher commitment level and, you know, wanting and leaning in to build a relationship and things like that. So I still enjoy that, but a much lessened version.
No, I'm on the same page as you, and I look at, you know, the InsurTech Connect conference in Vegas. I mean, just the personal connections you can build in person with you and I being, you know, 15 feet away from each other for a couple of days.
Yeah, you're almost forced to talk to each other, whether you like it or not. Okay, so that was the consulting world. One thing you did tell me over coffee that I found was really interesting is you spent time in South Africa. Mm-hmm. So I wanted to hear a little bit about that story. How did it come about? And then also, what was the experience like working in South Africa for half a year?
Well, sure. I'll start by saying, I know we just had the World Cup in Qatar for 2022. If anyone listening ever gets a chance to go to a World Cup, I highly recommend it. I was lucky enough to be in South Africa when the World Cup came through in 2010.
With the vuvuzelas, right? The
yeah, the vuvuzelas. And people thought it was bad watching the games on TV. Imagine living in Johannesburg where somebody at any time of day is blowing a vuvuzela. So just the entire city had a low kind of hum.
I remember listening to it.
And
even when they addressed it in like the first couple games, like the announcers had to tell you why these like what they were and what sound you were hearing, because I'd literally never heard it before in my life. Were those did they originate in South Africa? Like, where did this horn even come
I
from?
couldn't tell you the origin story, but the first time I heard one was about 6 months before the World Cup, as my plane touched down in Johannesburg, and I went to meet they would become friends, but at first colleagues I was about to work with.
Yeah.
They literally blew a horn as I came through security. And I go, what the heck
What is this?
that?
What did I do? So how did the connection, the relationship with those guys in South Africa start?
Yeah, I think if anything, I just say it's a great lesson in, the power of just reaching out to people and connecting. So I read about some guys in South Africa. They had all been friends in undergrad at Harvard, and they were starting what we'd now call an entrepreneurship incubator or accelerator.
Mm-hmm.
At the time, we kind of didn't have that vocabulary. But what they really wanted to do was invest in high potential entrepreneurs in under-resourced communities in the townships throughout South Africa.
Interesting. Okay.
And I read about what they were doing. Just
Where'd you
reached
read
out.
it? Like, was it in
Honestly,
Newsweek or something, or,
yeah.
or online, or
Honestly, I think it was an email from another Deloitte guy who was at Stanford getting his MBA and just forwarded something, and it got forwarded around to me, and I reached out and had a great conversation with the founder and his co-founder at the time. They were both South African and had just moved back to Johannesburg. And they had another guy who was a British guy. They all knew each other from college. And essentially they said, hey, you seem really passionate. Would you love to come out and help us build this?
Okay.
And next thing you know, I was on a flight to South Africa and there for half a year kind of building what eventually became something called the Awethu project, Awethu. It's still in existence and running in South Africa.
You said this was kind of the precursor to what we think is an accelerator or an incubator today, right? Was that term or that nomenclature even in existence in 2010?
It's a good question. We kind of called it the Awethu Empowerment Fund. Without getting into the lengthy history of South Africa, which I'm sure people are generally familiar with, there were a lot of efforts to say, how do we empower these kind of under-resourced communities and provide the right sort of funding for it?
Yeah.
So initially it was kind of a fund with a focus on how do we invest in high potential entrepreneurs from these backgrounds.
Very cool.
And that was really our mission, was say, how do you go out and find these folks systematically and equip them with the resources to take their entrepreneurial spirit to the next level?
Is there anything that culminated from that fund that you can point to as a kind of a success story that people might be aware of? Or, obviously there's levels of success, but is there anything that might be a household name? This podcast is brought to you by True Captive Insurance, a premier medical stop-loss captive for employer groups ranging from 25 to 1,000 employees. True Captive believes in healthcare that is personal and insurance that isn't complicated. That's why they take a white glove approach, making it easy for employer groups to transition into a program built specifically for them. Check them out at truecaptive.com.
Oh, gosh.
Tool in existence.
In the United States, probably not. But in South Africa, they're doing really well. They've become really well known. They point to a lot of success metrics, like thousands of people that have gotten employed and stuff like that.
Very cool. When did I guess you left Deloitte for this endeavor, right?
I did. I was lucky enough.
That's a bit of a leap of faith, man. So tell me about that.
Yeah, well, I was lucky enough. I had actually gotten into business school, and Deloitte was kind enough to kind of sponsor me on the back end of that. Okay. And then I heard about this, and I said, hey, can I leave early and go do this for a while before I go to business school? And
the plan was just to do it temporarily.
Yeah, and then it was interesting because I might have had an opportunity to go back and continue doing that, but I realized I was ready to be home in the United States for a while after that. Yeah.
So you went back, got an MBA, I guess is what was that at UVA or was that elsewhere?
Northwestern.
Chicago, okay, cool. And then were you married, kids at the time, anything like that yet?
Girlfriend who's now wife with kids.
Okay, very cool. So I want to flash forward in the timeline then and obviously keep it relevant to today's conversation. But before we get into the ICRA world and take command, I do want to ask about the experience with Oscar. That's something I've heard in passing, but I don't have a lot of familiarity with it. So I believe you told me you were kind of standing up their Texas location, but talk to me a little bit about what that solution was and what you were doing for them.
Yeah, I'll tell you, my intersection with it was I had been inside these big health insurance companies, and I realized that most of them had built through inorganic growth, essentially buying smaller health insurance companies and cobbling together. Okay. The most successful story of that's United Healthcare, the 800-pound gorilla in the industry. When you get inside, though, you realize that, over decades, a lot of the core systems, the processes, even the cultures may not have been totally kind of integrated to feel like one company.
Okay.
And that meant that there were a lot of people in positions of power and influence within these organizations who had the right vision of how they wanted to change and improve healthcare, and in particular health insurance, but they were stuck with these kind of legacy systems.
Yep.
And so I developed a personal hypothesis that, man, if you could just build this the right way from the ground up, you might be able to affect change more easily in the health insurance markets. At the same time, the capital requirements of launching a full-fledged health insurance company.
Yeah. Well, I think I saw Sana recently, SANA, they're a level funded plan that I believe originated in Austin. They raised something like $145 million or something.
Yeah.
So the economics are vast, right? And that was after they had already been in existence for a couple of years.
Exactly. So, and I consider myself a pretty good storyteller and salesman, but I don't know if I can go raise $150 million off of my stories.
Yeah. Tell them you're putting together a health plan. I'm sure that people throw money at you.
So I heard about this company in New York. They were just in the New York City metro region at the time, called ICRA, and just got, through a little bit of networking, got to know some leaders there, found out they were launching in California, in Texas, and was part of a small team to come out to Texas and launch the business. Eventually kind of took over our Dallas office, and we turned that into a regional hub, if you will. And then built out mostly a sales and distribution team that kind of went across the country launching the products. And the products were ACA compliant individual plans, small group plans in certain markets, and in a couple of markets, even Medicare Advantage.
Okay.
So
how long were you there?
I was there for about 5 years.
5 years. Okay, cool. And I'm sure a great time, obviously, getting to develop a region, right? And like you said, kind of take this blank canvas and turn it into what you envision for growth rather than a hodgepodge of companies put together and trying to make them work. So from there, when was the connection point with Jack and Take Command?
Yeah, so even though I've never been a founder, I kind of was in this very entrepreneurial role here in Texas, and Jack and I connected very early. So around 2015, 16, we started a friendship because he was just starting Take Command. And so I guess you could say we did business together in the sense that his agency, it was just kind of a web-based agency at the time, was representing a lot of carriers, including Oscar. So, we stroked him some commission checks. They were probably tiny in the early days. And then that just started a friendship that, over the course of 5 years became kind of us sharing insights around how we thought the market could evolve, to eventually in 2020, me coming on full time to help him build the business.
Well, did you guys over that course of time just realize you probably would work really well together? And did you, a lot of times when you hear, I know are you not necessarily a founder of the company, or would you consider yourself a founder?
I'm not technically a founder, but I've been
You're
building
very close.
it.
So informal founder of the company. I realize, like, even with us, we have co-founders and they have different personalities, different skill sets, but complementary together, the sum is greater than the parts, right? So like, was that a situation with you guys where you helped each other with deficiencies, but brought your own abilities and skill sets to the table as well?
I'd like to believe so.
Okay.
I mean, Jack is just an amazing leader. He's an N of one. What I would say is that I was probably the first person that we hired on the team that really came in with a strong background in health insurance. And in particular, I would say a real understanding of distribution and the benefits broker landscape. And that was going to be key, and has proven key over the last 3 years as we've kind of, maybe 5 to 10x the business in terms of revenue and number of clients, and really evolved over time.
Okay. Well, so I guess it's probably relevant at this point to go ahead and let's define and let's say what an ICRA is, even describe the acronym, what it stands for, and then even if you'll tell me in your own words what exactly is an ICRA. We'll keep that as that'll probably be a clip too. So let's go ahead and just make that a little cohesive answer. But I want to hear, what is an ICRA?
I'm going to twist the question just a little bit.
Please do. Yeah.
And I'm going to start by saying, what is the backstory to ICRA? And what I would say to that is, imagine someone 20 years ago getting a job in HR, and they get the job because they love people and they want to support the people in their organization. Somewhere during that first week of orientation, they're told part of your job is to also shop for the health insurance benefits. And they go, oh, I didn't realize that was in my job description. And innocently, that person raises their hand and says, hey, how come we can't just give them money and let them shop for health insurance? And in effect, there were two main reasons why historically. One is that people purchasing in the individual market don't enjoy the same consumer protections that you would with a group health plan. Two, for tax reasons, it makes no sense. Because the IRS is going to look at that money you're giving the employees and just call it wages and take taxes off the top. And ICRA is the answer to that question in terms of now there is a way to do that. It solves for that tax issue. The first issue is what the Affordable Care Act really tried to address, which was the lack of consumer protections in the individual market. So all I have to say is, what is an ICRA? It's a way to give tax-free money to your employees so they can buy the health insurance plan that best meets their needs.
Okay. So the ACA, you said that added consumer protection. So give me some examples of what those consumer protections might have been that they weren't afforded prior.
Sure. So no medical underwriting.
Okay.
So it doesn't matter if you're sick or healthy or otherwise, your premium's not going to be affected by that, and they have to offer you the policy. So that's the first major one. The second one that the ACA did in consumer protections was really establish a set of essential health benefits that we would all consider part of health insurance. You know, hospital stays, primary care visits, drug benefits, maternity coverage. These things were not necessarily standardized on a national basis prior to the ACA.
Okay.
The other thing is it established kind of the formal metallic tiering framework of like gold, silver, bronze, et cetera.
Okay, very cool. So those two problems existed pre-ACA. The ACA assisted with the the issue of consumer protections. Get that. Tax savings, right? Or the tax implications if you were to just hand money to an employee, the burden would be on them. So how does an ICRA solve for the tax issue?
Exactly. So what happened was in 2019, the rules were finalized through a combination of work from the Department of Labor, the Department of Health and Human Services, and the IRS, the Treasury, where they said, okay, if a company does this, this, and this, they can now give employees money tax-free. An ICRA is technically a stack of legal documents that say, hey, here's what we're going to do.
Okay.
And so an ICRA in its purest form is just a stack of documents.
Okay.
But what you and I know is that an ICRA or any benefit solution is so much more than kind of the technical documents that create it. It's about the employee experience and about solving whatever that employer's headache might be. It's about helping them see, okay, can this be a win-win?
Well, so say, I mean, all insurance is a combination of words in the four corners of a contract that establish what buyers and sellers are obligated to do, right? Like everything we do is sort of ethereal, right, in nature, right? And so this just solves for one particular aspect of what was it a problem so much, or was it because there seemed to be a demand for this type of solution that borne this opportunity out?
Good question. So technically, the ICRA rules were established under the Trump administration.
Okay.
And one of the fun things, though, about ICRA and this model is it's very bipartisan. So it built on some stuff that was passed at the tail end of the Obama administration, which, now I've already overwhelmed you with ICRA. I'm going to give you another acronym.
Please.
QSARA, Qualified Small Employer HRA.
Okay.
So the way to think about it is, just chocolate and vanilla, two different flavors of ice cream. But QSARA was established during the Obama administration. For the purpose of our discussion, let's say for right now, they're basically the same thing, just that the Obama administration said, we're only going to make this model available to small businesses with less than 50.
Less than 50, okay.
The Trump administration looked at that and said, we actually kind of like that. Let's build on it through the regulatory process. And that's where we get ICRA that says a company of any size can do this. And in fact, we've seen companies with thousands of employees elect to move to this model.
Okay. So is there anything that partitions those two things now, since the Trump administration sort of built on the notion of what you said Obama was doing for a small group? Are they essentially the same thing in nature now, or do we need both solutions, or is there slight differences in the way that they function?
Yeah, so if the company's over 50 employees, there's no choice. They're going to go the ICRA route.
Okay.
And there's some cool flexibilities. For example, if you've got employees in Texas and in Florida, and let's just say for argument's purposes, the health insurance market in Texas is a little bit more expensive than Florida, you could set up an ICRA to give those employees in Texas a larger allowance.
Okay.
So that everybody has equal buying power in their local market.
I see.
So those are some nice flexibilities for larger employers on the ICRA side. For small employers, they have a choice. They can go with the QSARA or the ICRA route. And so one of the things that our kind of sales team specializes in is understanding all these complex rules and advising small business owners to say, and their benefits brokers, to say which one's right for them. And so, for example, with a QSARA, what you can actually do is reimburse someone for a COBRA premium they might be paying for a former employer's health plan. So for example, in the world of startups, you're starting a little 3-person company, you're trying to recruit a couple of folks and you say, hey, I'm not putting a benefits plan in place just yet, but do the COBRA and I'll set up a little program to reimburse you.
Okay.
So that can be a nice reason to go QSARA. Another one is that with a QSARA, you could technically set it up to reimburse an employee who's on a spouse's plan for that spousal contribution.
Okay, cool. And I don't know, did we touch on it with the ICRA acronym, what it means?
Did I not even define it?
I don't know if we did or not,
gosh.
but just in case, can you go ahead and define it real quick?
ICRA stands for Individual Coverage Health Reimbursement Arrangement.
Okay, I was thinking health reimbursement arrangement, but I was going to say individual consumer. So it's individual coverage,
Coverage.
health reimbursement arrangement. Okay, so that's funny though. Like we have to, why do we make it so complicated? I think that's just the nature of insurance. So the ICRA model, right, is kind of what you described. It's got a reimbursement component to it. So really quickly, why don't you define to me, if I'm an employer and let's say I'm a 100 life group, so I'm not necessarily going to be able to go the QSERA route. If I'm exploring this ICRA option, what am I considering? How does it impact my employees? Tell me about the mechanics of it. Radion Health's Level Funded Plus offers brokers and consultants transparent and reliable level funded insurance for groups as small as 10 employees. With national PPO network access and 100% return of claims fund surplus, small groups can gain more control over healthcare spend without the need for IHQs or claims data. Discover a great alternative to fully insured plans at levelfundedplus.com.
Sure. So the funny thing about the ICRA process and evaluating it is it flips our norms on their head as a kind of a benefits industry, in the sense that we're used to being price takers if we're a broker, a benefits broker, or an employer. Hey, quote me. Give me the quote. Let me know what the price is. With the ICRA model, we're doing something different, which is we're saying, well, what's your benefits budget? How much money do you want to give your employees to shop for? And I'll tell you, after some pattern recognition, every employer says, well, I don't know, how much money should I give them? So the first question is we're helping them figure out, what does the local health insurance market look like for individual plans? What are the price points? What are the carriers available? And sometimes that might be a quick screening out mechanism. They're not comfortable with the local insurance companies in the individual market. Or they see a lot of brands they know and love and they say, yep, let's move forward. And then from there, we might say, okay, well, let's do some kind of mark-to-market evaluation and say, okay, if you want to provide enough buying power to your employees such that they can all afford, 80% of a silver plan. Now, granted, they can pick any carrier they want that's in the individual market in any plan, as long as it's ACA compliant. But what we're doing is we're kind of marking the market to make sure that we feel comfortable with the level of buying power and benefit they're going to be able to get.
Well, so it's almost a notion of a defined contribution, right?
Exactly.
Okay. But it's a defined contribution while an employer has an opportunity to sort of exit the risk-taking market to a degree or altogether, theoretically, is right. So this isn't necessarily going to be, if I have 100 employees, that all 100 are necessarily going to have to take the ICRA route, correct? Or do they?
Well, you cannot give an employee a choice between a group health plan and the ICRA model. So that is a very important distinction. You can't say, well, you can either have the group plan or you can have the allowance. The allowance will satisfy your requirements under the Affordable Care Act as a large employer. So it checks the box for the employer mandate, provided it meets some compliance needs. But you can't offer them a choice.
Okay.
Now, of course, just like with a group health plan, they could choose to turn down the ICRA offer and instead say, hey, I'm going on my wife's plan or whatever it might be.
Okay.
The other thing I would just clarify too is, as you talk about that 100 life group, really where does the conversation start if you're advising? Hey, I'm a 100 life group. I'm fully insured. I'm a rate taker. Every year I get the 20% renewal. I want to get off the treadmill. If you're a benefits broker, I think the conversation to have there is, okay, well, you have a choice. You can either lean into risk management and let's think about some of these strategies and tools and programs that are out there that many of your guests have talked about in terms of managing the risk, going more self-insured, and bringing great solutions to the table. Or there's another off-ramp that's kind of the opposite, which is more of that defined contribution model. And that's kind of where we specialize, is working with our benefits partners to say, hey, is this the right client for our off-ramp versus another off-ramp you may have available? Yeah,
so kind of weigh the pros and cons if you can be somewhat objective, add that fork in the road that you just described. Get in the real risk-taking business with self-insured, or get that exit ramp altogether and just get out of it. So as I'm evaluating the pros and cons of each, kind of give me a couple examples of why I would go either particular path.
I think it starts with maybe will. I think, and what I mean by that is, does the employer have the stomach and the effort and the time to really deploy a lot of these kind of best-in-class tactics that are more on the self-insured route? Because there's a world where ICRA, while it's a huge change management experience, it is kind of the easy option of, hey, I just want to set an allowance. But that being said, from a pure kind of alpha creation and cost savings perspective, there might be more if they go down that self-insured route. So that's the first thing I would point out. Second thing I would point out is also, as we know, like all healthcare, all health insurance is local. If they're in, and I'm going to pick on Alabama, sorry to anyone that's listening from Alabama.
There might be actually a couple I know of that are from Alabama, but go ahead.
But what I'd say is, if you look at the individual market in Alabama, it's 99% Blue Cross Blue Shield Alabama. And if you're currently on a fully insured plan with Blue Cross Alabama, by moving to an ICRA, are you really creating more choice for your employees? No, it's Blue Cross Alabama or Blue Cross Alabama, right?
Yeah.
So if one of our goals is to create better consumerism within our employee population and giving them more carrier or plan choice, that may not be an objective that you can accomplish with the ICRA in certain markets.
Sure. Well, in that particular example, though, like, so either I am an employer just essentially contributing to a group plan with Blue Cross of Alabama, or all of my employees go in the individual market and I give them a stipend. Is that, or what would you call it? What's the term for the money they're getting?
Let's see. Technically, you could call it a reimbursement allowance,
Okay.
but stipend, like whatever word works.
But yeah, I want to be.
I like allowance.
Allowance. So I give them an allowance, and they go shop for the same plans essentially in the market. Is there any real downside to me as an employer for offloading that risk and just giving them the allowance to go do essentially the same thing I would be giving them in being in the risk business slightly?
No, that's a fair point, right? Like that is still maybe a reason to pursue the ICRA strategy is if you're just, hey, I'm tired of being medically underwritten as a middle market company, and I'd rather, I was just hearing some stats this morning. There's like 16 million people nationally in the individual market. Hey, I'd rather have my employees be in that risk pool.
Sure. Well, I do. I'm just kind of in real time evaluating the pros and cons of each because I find this really interesting. But it's also essentially just turning it into like that allowance is just porting them over into the individual risk pool. I'm not necessarily doing anything to then control or steer the risk like I might be if I was going down the self-funded route. But are you seeing over renewals as the increase of cost goes up that the allowance is then having to be increased year after year? Does the employer still see the financial impact of the rate increases simultaneously?
You bring up an interesting point, which is what does a renewal look like on an ICRA?
Yeah.
And it's fascinating. We're still figuring this out as an industry because historically, again, we all know the tried and true, okay, we got the renewal from Blue Cross or pick your carrier. And hey, it's a 12% rate hike. Well, let's go shop it. Let's see if we can bring this down. Like we all kind of know the kabuki theater of that at this point, right?
Yeah.
I think with ICRA, we're figuring this out in the sense that it starts with a budget-driven conversation where you say, well, here's what you're currently allocating to your employees for their health insurance benefits. Let's do some quick kind of market snapshot allowance to see if we're still comfortable with the amount of buying power that can provide.
Okay.
The other thing I would say, though, is what we've seen more broadly, and I think this is one of the most underreported stories when it comes to health insurance, is the broad-based stabilization in the individual market. The first couple of years were extremely choppy. We saw a lot of carrier exits. That chaos created opportunities for companies like mine, Oscar. But what's happened in the last 4 or 5 years is rates have stabilized. And so if you look at the average premium rate increases in the group market versus the individual market has been much lower rate increases. In many markets, rate decreases year over year.
Well, I mean, as that risk pool grows, I mean, it's just actuarial science, right? The law of large numbers, you're going to get a more stable risk pool over time. We'll come back to this conversation as I get us to go into the future of the ICRA and what you think the impact will be. But I'm seeing the pathway forward if enough critical mass is reached with the ICRA that you're almost getting kind of a public-private solution, because it is essentially it is what the government was sort of pushing with the ACA to have more people in the individual market, to have more involvement, right, and encouragement of people to join in that market. Well, if that market grows to 50, 100 million people, it's kind of solving that question of do we go to the public route or do we go the private route? That's kind of a hybrid solution, is it not?
I would say it is and it isn't. I mean, at the end of the day, they are employer funds, so it's very much a private market solution. And at the end of the day, the insurance plans are the brands we all know and love.
Sure.
Or maybe we don't love them. But,
I don't know about love. That's a little bit.
It's the BUCAs, it's the regional HMOs, it's all of them that are in the individual market today. And so it's very much a private market solution. But you're right. There's been a lot of public rulemaking and changing, and obviously the standardization that came with the ACA. So I agree. It builds on a lot of the public policy changes that have enacted in the last decade.
We'll come back to that as we kind of close out the podcast. I just had that thought and I wanted to at least flesh that out before I forgot about it. But now I want to go down at the micro level. Let's talk about an actual use case, right? So I'm an employer. I weigh my options. I work with Kyle. Kyle presents me some great solutions with this ICRA. I think this is the path I want to go. What does that do for my business? What does that do for the cash flows? What is the order of operations? I want to hear a little bit about the ground floor of this thing when I put it in motion.
Perfect. So what I would say is the first thing, again, through just Now we've got actually almost 5,000 companies on our platform.
Okay.
The majority are small businesses, but we're learning a lot from our larger clients around change management.
Okay.
So that's the first kind of buzzword I throw out there is change management, because a lot of heads of finance and business owners love the ICRA and concept. But the first thing we do, usually when a client says yes, is turn to HR and go, let's take a deep breath. We're in this together.
Yeah.
Because the head of HR knows that anytime there's a significant change to benefits, it's in their office where all the pain points get felt. So one of the things we like to do is really work with the client to prepare them for the change management involved. And a lot of that is around employee education and saying, hey, you're still going to get this great benefit from your employer. It's going to look and feel different from anything you've had before.
Okay.
But we've seen bad change management, and what that looks like is, hey, everybody, we're getting rid of the group health plan, ...
Yeah, and they're like, what? Yeah.
They don't read after that first sentence, right?
Yeah.
It's, hey, everyone, we're going to do benefits a little differently now. Okay. Instead of us picking the plan for you, you're going to have more choice than ever, and you're going to have an allowance, and you're going to get to go shopping. And oh, by the way, we've teamed up with Take Command, who has a software platform to make this easy, so that you can log in, see your allowance, go shopping, and get the support you need end to end.
Okay.
And so as we talk about Take Command, I don't want to turn this into a commercial, but
no, I do want to hear though. I mean,
really our whole thing is we want to be an end-to-end solution that understands the different pieces of this.
Yeah.
And so I'd say the first piece is really understanding kind of the design up front and the compliance that goes into it to make sure we're putting together a compliant program. The second piece is, I would say, some sort of kind of software administrative platform that makes it easy for HR to set up and run it, and for employees also to kind of go through it. And then the third and most important is probably kind of this idea of right plan for the right person.
Okay.
And with that, we mean making sure that if that employee is kind of flummoxed with the paradox of choice, they have more choice than ever.
Yeah.
How do we help them make a good choice?
When you say more choice than ever, in theory, every plan that's filed in their geographic location, they would now have access to choose, correct?
Exactly.
Or choose from. Doesn't necessarily mean their funds are going to pay for it, right? And they have to weigh that value proposition. But rather than me going as an employer with my consultant, we chose Blue Cross and we presented 3 options of Blue Cross only to them. They now have the ability to shop in the open market in that state. Correct.
Exactly. And so we're here in Dallas-Fort Worth, and we've just in the last couple of years had Cigna enter the market, United re-enter the market, Aetna re-enter the market. So we've got these brands that people are familiar with, but it's, again, more choice than ever. We probably have about 100 different plan options.
Okay.
So how do you guide that employee to say, well, first, what doctors do you use? What drugs might you be on? Let's really narrow down the choice set quickly to figure out what plans are going to provide the right access you need. Okay, now from there, let's look at premiums. Let's look at cost shares. Let's look at perks and brand comfort. And obviously we can do that with software, but also health insurance is so personal, making sure they know that someone's just a phone call away to help them walk through it.
Yeah, and so even you probably get to questions like, is my doctor in network if I change from Blue Cross to UHC? So are you guys helping with even answering some of those type of questions, some of the research that would be needed to make a choice?
Absolutely. Okay. And that's where there's some pretty good, I think we're still getting there as an industry, but pretty good data providers out there where we can, ping them via an API and say, okay, for Dr. Smith in Dallas, which insurance plans is Dr. Smith in network with?
So what about then the money? So let's assume we put that in motion like you just described. I, as an employer, have decided I will give X amount of dollars to these individuals to go shopping. So I'm now Tom that has a family with 2. I'm given $1,000 a month to shop. What does my experience look like to go shop for those plans?
You're hitting on something really important, and I want to talk about the money because we, in the early days, we figured out this is the iceberg that can sink the ICRA ship if you're not careful.
Okay.
And with the word that comes to mind is float. So you and I know, like, companies are spending buku bucks on health insurance. Now, does the average employee always appreciate how much money the employer might be putting into their health insurance?
They probably don't have any idea how much it's going into it.
Right. And so what they might know, and oftentimes they don't even know, some money is coming out of their paycheck, right? So the way it works with the group plan, or really most any group solution out there, right, is the employer pays the premium, and then on the back end, some money, the employee contributions taken out of their paycheck.
Right.
With an ICRA, in its simplest reimbursement model, the employee needs to pay the premium and then get reimbursed for whatever allowance they're allotted.
Okay.
Now, sounds simple enough. I mean, there are frameworks like, hey, I went on a business trip to Des Moines and I had a meal and a plane ticket and a hotel room. Let me show my receipts to finance. Let me get reimbursed. But when it comes to health insurance, this is a huge change.
Okay.
And frankly, especially as we talk to larger companies in the early days, this is a real barrier to adoption.
Okay.
Because there's valid concern that the employees just can't float that.
Well, I was gonna say, yeah, I mean, like what's a family premium in certain markets might be $2,500 a month, something like that, right? And so if I don't have the means, even through the swiping of a credit card, to pay that, even knowing in 7 days I might get reimbursed for $1,800 of that, like that's a scary proposition. So I'm sure you guys have worked on the cash flow piece of it.
We're on a mission to partner with the most innovative companies in America to fix health benefits, one plan at a time. NavMD has created a blueprint that delivers world-class benefits to 155 million Americans. Better benefits starts with data intelligence. Our platform is empowering the next generation of advisors to zero in on opportunities to optimize the plan, build the right team, implement proven strategies and solutions. Join us on our journey to revolutionize health benefits. Let NavMD put you a step ahead.
Correct?
Yeah, and I think, Take Command, we've developed our own kind of financial technology solution that sits on top of a banking solution. There are some other companies out there working on solutions. I think this is a fun nut to figure out how to crack for an industry writ large. We've got a solution we're proud of that pretty much all of our large clients turn on that allows the employer to pay those individual market premiums directly on behalf of the employees and then simply deduct whatever needs to be deducted from paychecks. Yeah. So it feels from an employee experience just like a group plan from a cash flow perspective of, hey, I went shopping, I had more choice than ever, and then on the back end, some money was taken out of my paycheck.
Yeah. Well, so in my world, in the stop loss insurance world, that would be spec advance funding or simultaneous reimbursement. So just to describe real quick, because there's a corollary there, it's like if I'm an employer and I have stop loss insurance with a $100,000 deductible and then I get $1 million claim, if I don't have that spec advance funding or the simultaneous reimbursement, I've got to pay for that $1 million claim and then wait for $900,000 to be reimbursed. Not every employer has $1 million sitting aside to pay for one claim. So what they would do, or what the stop loss carriers came up with, was this notion of simultaneous reimbursement, where with a limited data set and a couple day turnaround time, they would reimburse at the same time, so you get your $900,000 back at the same time you're pumping out $1 million. Same
exactly. And for a small business
scale.
owner, that might be the difference, being able to make payroll or not.
Exactly. Literally, exactly. So okay, so you guys have solved that problem, right? So now let's just say this has been communicated to me. I'm in a 1,000 life employer, so I have access to this solution. I'm assuming it's probably an additional fee or PEPM for the cash flow solution.
Yep, that's kind of an add-on solution.
Yeah, so it's an add-on solution. But okay, I go, okay, well now I'm comfortable with that. I know I have $1,200 or $1,000 to shop with. Do I go through Take Command's site portal to go do my shopping experience now and pick a plan?
Exactly. Okay. So that's when we talk about an end-to-end solution, we want to have both the kind of administrator view for HR, or frankly their benefits professional, as well as the employee level view. And so the employee essentially is getting a welcome email, some educational videos saying, hey, you've got a new type of benefit, here's how it works. We try to condense that down to what's the 30-second explanation of how this works without trying to explain, how to spell ICRA or QCERA.
Yeah. Totally.
And then, okay, hey, great. Spencer, you live in Dallas and you're X number of years old, and you're shopping for you and your wife and your kids. And okay, your allowance is $1,000 or whatever the employer has decided, right? And that's where software becomes important, because we can program the allowances to be kind of regionally specific or person specific.
You said even with age bands, because the older you are, right, the more expensive your insurance is. So there's an allowance uptick, right, or an increase in allowance as you go up the age band as well. That's compliant still.
Exactly. Okay. And that's where I'll credit the rule makers in DC. And I don't often do this, but, but they were smart enough to realize, employers are going to say, well, I just want to give everybody $500 and that seems fair. Well, it's not really fair, because it might be incredibly generous to the 20-year-old that has a $300 premium, but for the 64-year-old that has a $900 premium, it's not fair.
Correct.
So a lot of what we're doing is coaching with our broker partners and their clients to say, actually, the most fair thing to do is provide an age-adjusted allowance so they have equal buying power.
Okay, but then like you said, you back into, I can spend $500,000 this year on health insurance, or I could put $500,000 aside for allowances instead.
Exactly.
Right?
And that's what we call the art and science of ICRA design.
Yeah, yeah.
And how do you bring that alongside kind of a traditional group quote, right? We're still figuring that out.
Well, I would love to see y'all's financial models. My brain's already working what those Excel dashboards and things look like when you're calculating from a budget to back into what those allowances should be and then spreading that across a risk pool and age bands and stuff. I'm sure it's pretty fun as an Excel nerd in the past. Like
Yeah. I think you'd like the team at Taking That because we geek out on Excel and all the, the other thing too is just it's still so new in the market.
Yeah.
I always tell our new employees, look, you've been here for 3 months. You're literally going to have benefits professionals asking you a myriad of questions about this because we're all new at this. And believe it or not, by working at Take Command, you're kind of an expert on this.
Yeah, you have to be. So as you go through that execution side, I think one thing that you told me over coffee that I found was pretty interesting is I was asking a question about the financing of the out-of-pocket portion, right? Because we all know, anybody that's touched group health insurance knows that the premiums are one thing, but the actual out-of-pocket expense that a member might have to bear if they do need to actually consume the healthcare that they've been paying all this premium for, sometimes and often, a subset of the population can't pay for those things. So you told me that there is even the potential to spread some of that allowance across premium plus out-of-pocket expenses as well, correct?
Yeah, so we're still working on getting employers to kind of wake up to some of this.
Yeah.
Because the ICRA itself is this whole new concept.
Yeah.
But one of the cool things you can do when you set it up is either make it premium only, where you're just providing allowance for them to buy health insurance, or premium and medical expenses, where it's one kind of pool of funds that they can use, for premiums and medical expenses. So for example, for myself, and I'll use round numbers, my family, we get maybe $1,500 a month from our company, a very generous allowance for the whole family. And I opted for a lower priced premium, basically a close $1,000, $1,200 premium. Because I said, you know what? I'd rather have a higher deductible, but know that I've got an extra $300 or $400 a month that I can apply towards co-pays or pre-deductible expenses or co-insurance or drugs, whatever. And so I've got $300-400 a month. What's that? $4,000 a year that I can say, hey, I can use that towards out-of-pocket.
Well, I like that option. That, to me, that's a brilliant option because it weighs both sides of the healthcare equation and not just the premium equation, because that's only half of the battle. So then that may take a little bit higher level of sophistication to coach somebody through that choice. But then what does the payment flow look like? Like, am I submitting to my employer, this month I had $200 in healthcare consumption expenses, reimburse me? Or how do I apply that allowance for the expense side?
Yeah, I'd say right now it's a traditional reimbursement.
Okay.
So that's one of the nice things about our software is we built it to be able to accommodate the medical expenses portion as well.
Yeah.
So HR is not looking at copays and saying, oh, you had a wart removed or whatever. Much more intimate things than that, I'm sure. So, we're taking that off of HR's desk and we're doing it in-house at Take Command through our claims processing team. And what we're doing is, per the list of approved medical expenses, which is going to be kind of what we're all familiar with. I can't remember the IRS code, but it's the same list as HSAs and HRAs. We're reviewing those and approving them on behalf of the employer and then saying, hey, employer, you owe Betty $100, you owe Jimmy $50, whatever it might be. As we think about our fintech solution, I think we'll probably get to the point in the next couple of years where it's more debit card based or fully linked into the kind of fintech.
Yeah, absolutely. And so is that coming in the form of added to their paycheck in the payroll, or is that a separate funding that happens for those expenses?
For the expenses today, it's going to be through payroll.
Okay, cool. Yeah, because the more seamless you make this, right? That's always been the crux of any new solution that you implement, especially in the self-funded world. It's like, oh, that's cool, that's great, that's going to save money on these claims, but how do we pay for it? How do we execute on the money flows themselves? And that becomes an impediment sometimes. You think about reference-based pricing, and I go to a doctor, and now the potential for balanced billing and things like that if they don't accept the percentage of Medicare, or could I present them to something that's kind of like a cash equivalent and have a debit card that could be loaded, and I just go, yep, my portion is $1,500, the rest billed to my employer, swipe card, we're done, right? So the closer we can get to that transactional nature where the payment is happening in real time, the more likely providers are going to be willing to accept it. And I think it's more likely for me as an employee to stomach that burden if there's a very short window before the reimbursement happens and it comes in the form of payroll. That's brilliant. Then you get to the debit cards and it's even better because it's simultaneous as well. So I like that. I love the solving of each individual incremental problem to make it easier for the person to consume. So if I'm a broker, and a lot of my audience is insurance consultants and brokers, and I'm listening to this conversation, I'm probably a little bit interested at this point. what is a kind of the right profile that I might come to Take Command or another ICRA kind of provider and say, this employer might be interested in this? What are you usually looking for as that low-hanging fruit for an opportunity?
Yeah, so a couple of things I'd say is one, we have clients in all 50 states.
Okay.
That being said, what we're seeing in these early innings of ICRA adoption is there are certain markets where it's just becoming a little bit more well-known than others. So Colorado, Georgia, Minnesota, Ohio, Pennsylvania, we're seeing a little bit more market traction for the model than others. That being said, though, if you're a benefits broker anywhere in the country, it behooves you to get smart on this and just think about this as another solution on the shelf to potentially use for new client acquisition, or if it's just, the client's sick of, one rate hike after another year after year.
That fully insured hamster wheel.
We call it the treadmill. The other thing I would say is that in terms of what's emerging as a sweet spot, I'd say it's that kind of 50 to 5,000 employee space, maybe 50 to 500. But the reality is, hey, I've got to offer a benefit. I'm an ALE. I'm stuck in this kind of fully insured hamster wheel. I'm really interested in a defined contribution model, but I need a solution that's also going to be really leaning into the change management because I'm worried about that.
Yeah, absolutely. Yeah. So like if I've checked all the boxes for what you just described, although I'm sure you'd take a 10,000 life group or a 20,000 life group if a broker wanted to send it your way. I'm a sales guy myself, I know. But like if I'm doing that now and I want a quote unquote quote, I realize it's not as easy as that. So what data do I need to provide you with in order for Kyle and his team to evaluate this use case to determine whether or not it's a fit?
Yeah, so we've built out an entire account sales team, and our director of account sales, a guy named Tanner, and his crew have really developed an amazing process. Our goal is for our benefits brokers to make it as much of a seamless kind of quoting experience as possible. So we really just need a census. We need some understanding of the current business situation. And what they'll do is they'll go out there and take all the data on the local individual market and kind of run it through a lens of saying, well, how much are they spending on benefits today? If we were to provide this amount of allowance, what would be the choices the employees have, and what would that do for the employer's budget? What are we looking at timeline wise? What about the fintech solution? Should we put it on the table? So they're really good at quickly putting together a proposal and evaluating it kind of hand in hand with the benefits partner to say, hey, is this something you think the client wants to look at?
Okay. So if I'm a client, then is this something I'm doing at the same time I'm maybe going through my renewal season? Okay, so it's happening simultaneously. Mostly.
Exactly. Yeah. So a lot of times we tell our benefits partners, hey, think about us as just another solution where, hey, I've got Aetna today and I want to quote Blue Cross. I want to look at some level funded stuff or self-funded. And then, over here, there's this thing that's a little bit different. It's called ICRA from Take Command. And we want to kind of be, while we might not actually be on the quote sheet, we want to be on the table as the kind of left field option.
Well, do you find yourself having to actually get involved actively kind of in the sales close since this is such a new concept? It's not necessarily a spreadsheetable story that can be told, correct?
Yeah, and frankly, what I would say is the more that we can build trust with our benefits partners so they can let us handle a lot of the complex compliance questions or kind of under the surface change management questions, generally the better the experience for our benefits broker partner because they can see like, hey, we've got all the right answers, and frankly for the employer. So what I would say is our best broker partners bring us to the table and allow us to be kind of the ICRA experts and let them be the broader benefits experts to help with the decision making.
Well, and that's I look at kind of the parallels to again, the self-funded world as captives are kind of a similar sales cycle, right? It's like if you just come in and spreadsheet a captive and show all the risk layers and technically speaking, just teach a captive, that's not necessarily going to captivate an employer. And especially if I'm a broker, being tasked with having to explain all of the intricacies myself, I'd probably lose the ability to do so, and it might go over my employer's head. So having a trusted partner at the table with you, having that conversation on your behalf, you're still the one that brought the idea. You're still the one that has a relationship. You're still involved actively in the coaching of it, but you can lean on somebody to teach, and you can lean on somebody to answer those very difficult questions that you probably can't answer yourself. I see you guys as a similar position.
That's exactly right. It's let us be your kind of ICRA nerds that you kind of, you keep us over there in the closet until you need us, and then you say, hey, I got these ICRA nerds, let them come talk. And then, obviously if our broker partners and their clients need to debrief afterwards kind of without us and talk through solutions, like absolutely. But I'd say where things tend to get gummed up or too sticky is, and we've probably seen this even on your side of the table with other solutions, where the benefits broker makes the mistake of trying to be the expert in all things.
You can't be.
You can't.
Well, that's kind of what I envision that the role of this podcast may potentially do is like they have an impossible task of trying to be an expert on everything. It's no human being can do that. No single office can do that. I don't think any firm in the country, no matter how big, at what scale they have, can't be the expert on everything. You have to have trusted solution providers and vendors that you partner with that can be the expert in the thing that they're in. And so I see these conversations we have as a little bit as a way to shortcut some of that evaluation process so that you can find those trusted partners and do business in a different way. So in the interest of time, I think we want to leave people with wanting more, right? Sure. We don't want to go too deep in the weeds where we answer every single question of the ICRA. Then, when do you guys get to come in and do the sale? So we're going to leave that on the table for now, and let's zoom out a little bit, Kyle, and talked about future state, kind of big picture of this. So if you had a crystal ball as you're looking forward in the world of ICRAs, how do you think this might evolve over the next few years? What do you think will happen?
There's some data that just came out from a group called the HRA Council. It is a industry association. If anyone's interested in checking it out, go to their website, HRAcouncil.org. It's a coalition of insurance companies, ICRA vendors, us and many others. Some of the largest benefits brokerages are members as well. And they just put out a report recently that showed that this model's been growing like 200% a year in its first couple of years, maybe 350%, something crazy. So we're seeing really accelerated growth. Now that's off a low baseline, but if we were just to kind of zoom out, the individual market today is around 16 million people, as I mentioned earlier, maybe a little bit bigger than that. And we think that in terms of people that are in the individual market via an ICRA, it's way less than 1%.
Oh, really? Okay.
And per the government's estimate a couple years ago, they think about 11 million people are going to move to this model this decade.
So by 2030. Then.
Sure.
Yeah, okay.
And the one thing we know about that estimate, it's going to be wrong,
yeah, of
right?
course it is. The same like every time you sit down and be like, hey, I think your budget on the self-funded plan is going to be $10 million. But oh, by the way, that's wrong. So I just want you to know that I will never get that number right. But yeah, so even assuming they're in the ballpark, right, this is going to grow pretty exponentially over the course of the next few
Exactly. Years. And we think that, it'll more or less double the number of people that are in the individual market risk pool. We think that for some portion of employers out there, call it 10, 20%, this will start to look like a much more viable and attractive option than their current option set. The biggest barrier right now is simply lack of awareness.
Yeah.
ICRA and CUSERA are awful acronyms. I use them every day and I still, hate saying them. I think once we get to a more broader level of awareness and also within the benefits community, an understanding of where it is and is not a good fit.
Yeah.
We're going to start to see even more of that traction.
Well, I don't doubt it, right? I mean, this is a compelling story. Again, obviously, you guys, your job is to smooth out that customer experience, and every time you solve one additional problem, just to make it a little bit more seamless each time, right? Smooth out the road so they can fly at 70 miles an hour, if you will. But I do think, at least on the surface, this is a very compelling thing. Now, I imagine there's also going to be some people from my world, my self-funded world, be like, no, you got to get in the risk business and we can save a lot more money. And they probably are correct to a degree, but there's the complexity involved with that. And that's not going to be palatable to every single employer. So the point is there is another option now out there that might be viable for a certain subset of the employer base in the US. Now, as we go back to that earlier question, I want to kind of mine this subject a little bit more, this public-private notion. And, the people that want to push for a public solution would mean that we're going to be taxed and there is government-run healthcare. Then there's a full-blown, let's go all private and let's get the government out of this business altogether. And then there's somewhat of somewhere a gray area in between, which feels like an ICRA is a little bit of a gray area in between. Now, as this becomes more compelling and gets traction, it's not too far of a stretch in my mind to say, rather than the employers providing the allowance, why doesn't it come through a taxation and then the government is now providing that allowance, which is kind of what they're doing right in the individual market already today. So do you see that might help with potentially a transition down that path? Or do you think it's better served with the employers being the one budgeting it?
It's a good question.
That's a very complex question.
It is.
So I don't expect you to have a polished answer.
Let me try and formulate a short answer or a short opinion.
I'm going to leave the hardest question for the last question, right?
Here's how I look at it. To me, I focus on the end consumer. And we are big believers at Take Command. And by the way, we have people that work at our company of all political stripes.
Of course, yeah.
And this has been,
it's
I
not
think,
necessarily a political aisle question. It's more of like, what involvement do we go down more the path of this kind of this public style healthcare model, or do we stay in our privatized model or somewhere in between? Yeah.
And I think part of the reason the Trump administration latched on and liked ICRA was because of this idea of like consumer and employee empowerment of, hey, give them the money, let them choose, let them be kind of smarter shoppers, if you will. What I would say is right now, in terms of the current subsidies available in the individual market, those are kind of oil and water to an employer allowance via an ICRA.
Okay.
You can't stack them on top of each other. Yeah. So that's why I would say the ICRA is still very much a private market solution. Now, there are some within the actual Trump administration that started talking about this idea of kind of the backpack model, where it's like, hey, maybe I'm a very low wage earner. Maybe the government over time says, well, listen, you work for a small business that can't really afford to offer you benefits or give you much money. Here's the kind of subsidy you'd be entitled to in the individual market. But oh, by the way, your employer wants to contribute an extra $100 on top of that, and that's really all they can do, which, as you and I know, isn't really going to go far in the traditional small group market. Yeah. There's this idea of the backpack, where can I take some money maybe that I'm entitled to via government programs and some money from my employer and still get a private market solution like an individual product. Right now, you can't do that. But just yesterday, I was having a back and forth with some regulators. I won't say who they are or what state it was, but they started asking me, hey, could we maybe look at filing an innovation waiver with the federal government to say, is there a world where we could start thinking about stacking these, particularly for employees at small businesses, where there is no government regulation that employer has to provide coverage. And in my mind, it started raising some really interesting questions. If we're going to see some of this innovation occur, some of this public-private partnership, my guess would be the small business environment is where you might start to see some of that, because even today, 70% of small businesses don't offer coverage. Okay. And what we see in the ICRA and QSARA world is that almost all of our small business clients are new to offering benefits for the first time.
So virgin coverage style group.
It's virgin. It is, hey, we're dipping our toes into offering benefits for the first time.
Ah, interesting. So I didn't even think about to ask this earlier, but we've only talked about medical with this model. Theoretically, could it be applied to other coverages, right? Could I get my disability insurance through this model? Could I get my life insurance through this model? Are you seeing conversations happen around other lines of coverage as well?
When we zoom out and look at the 10-year vision, that's kind of our vision of it, is that we believe that fundamentally over time, part of the way we address a lot of our problems is through kind of empowering people with some sort of wallet, right, that they can use, and it's their wallet they can take from employer to employer to get different types of benefits.
Yeah.
Now, whether or not that comes to fruition, I don't know.
Yeah.
But it's just like, if you think about the way the 401k market developed, hey, I went and had a 401k with Fidelity. I now have a Fidelity account from that employer. And now I'm kind of merging these things over time. And that's kind of become my wealth management solution over time or whatever.
Yeah.
And we could see, we're pretty far from this, but we could see a world where that develops over the next decade.
Well, and I think obviously most people consider medical, it obviously is the biggest expenditure in the benefits package in general for an employer, but we focus so much on that. But to me, just replicating this model with those other lines of coverage seems like it would be possible, because it's like, I want to exit the risk business altogether. I'm not providing you dental, vision, life, disability, voluntary products, but here's an allowance of $2,500. Have at it, go buy whatever you want. And I feel good about myself as an employer that I did provide you value. You feel good as an employee because my employer is contributing, but the onus is on me now to go shop for everything and make that determination of exactly what I feel like I need and want to apply those dollars for. Okay, so maybe in the future we'll see something like that, but my brain can't just talk about the here and now. It has to always think about what the long-term vision is that. So Kyle, as we kind of exit the podcast and move on about our day, what are maybe some closing thoughts that you want people to think about if they've listened this far?
Well, if you listen this far, thank you for hanging with us.
Yes, thanks for being a full podcast episode listener. Guys.
What I'd tell you is a couple of things. One, I do run into benefits brokers from time to time who immediately want to just talk about all the issues with ICRA. And look, with any solution, there are valid criticisms. I don't care what the solution is.
Totally.
Nothing's a panacea in this industry. What I would encourage everyone to think about is yes, there are challenges with ICRA, and you never want to advise a client to adopt it without being honest around maybe some of the warts that exist. But that being said, it's another solution on the shelf. And if you are an advisor, you owe it to yourself to get smart on it and understand, again, when it may or may not be a solution for your client. And if Take Command can ever be helpful in terms of evaluating that for your client, we very much pride ourselves on being consultative salespeople. There are many times where I've talked to a benefits broker who says, hey, I've got a client, they're interested in an ICRA. We look at the case and we say, hey, this dog ain't gonna hunt.
Yeah.
They're better off with their incumbent solution.
Yeah, and I agree. I love that you use the word panacea as well. But I mean, like, just the idea, like, there is no silver bullet. Everybody that does their own strategy wants to, like, articulate why their way is the best way for everybody. And that's just not reality. And so I take a much more neutral approach. Yes, I advocate for self-funding because I believe in the possibilities with it, but I don't know the best solution for every individual employer. I can't tell every consultant what's the best pathway. They have to make that determination with their employer for their unique circumstance. And it could be a gap supplemental health plan, like I was talking to you earlier. It could be an ICRA. It could be go self-funded. It could be fully insured. It could be anything in between. And it's not really my job to tell somebody that they're right or wrong. It's just really to present those options that are on the shelf. So Kyle, I appreciate you explaining to me in very great detail what an ICRA is and opening my eyes to this. You got my head spinning a little bit about the possibilities here. So I hope everybody that listened learned a little bit. And if they want to reach out to Take Command and want to reach out to you, what's the best way to do so? Yeah,
so I'm pretty active on LinkedIn. So you can connect with me on LinkedIn. It's Kyle Estep. I'm the Vice President of Growth at Take Command. Also, my email is kyle@takecommandhealth.com. Check out our website as well. Anyways, we're just always looking for new partners to grow.
Yeah, absolutely. And I'll tag you guys in all the posts as well. So hopefully we'll drive some activity your way. But I appreciate you, man, and I look forward to talking to you soon.
Awesome. Thanks, Matt.
True Captive believes in healthcare that is personal and insurance that isn't complicated. Check them out at truecaptive.com.